Hello. In this video, I will be discussing on applicability of TDS on purchase of an immovable property. If you are planning to invest in an immovable property like land or building other than a rural agriculture land, then the stamp duty value or the actual consideration which a buyer will be paying to the seller is equal to 50 lakhs or more than 50 lakhs, then if the seller is a resident of India, the buyer has to deduct 1% from sale consideration and remit the balance amount to the seller. If the seller is a non-resident Indian, then the buyer has to deduct 20% plus applicable surcharge and education cess. In the screen appearing, there are two scenarios. The first scenario is when the seller is a resident Indian, then section 194IA will be applicable. Under this section, if the stamp duty value or the actual payment what a buyer will be giving to the seller is equal to or more than 50 lakhs, then the buyer has to deduct 1% from the sale consideration and remit that amount to the government. If the seller is not having a PAN, then the buyer has to deduct TDS at the rate of 20% and pay the balance 80% to the seller. After deducting this 1% or 20%, the buyer has to file FORM-26QB, wherein the buyer will be giving the PAN of the seller and the property details, the sale consideration and stamp duty value. This Form 26QB should be filed within 30 days from the end of the month in which the registration has taken place. For example, if the property is registered on 16th of June, the month end would be 30th June and Form 26QB should be filed within 30th July 2023. After filing Form 26QB, a certificate in Form 16B should be given to the seller within 15 days from the date of filing of Form 26QB. The second scenario would be when the seller is a non-resident Indian. In this scenario, section 195 will govern. The first condition, that is the stamp duty value or the sale consideration is more than or equal to 50 lakhs, then the buyer has to look into the holding period of the property by the seller. If the seller has held the property for more than 2 years, then the property would become a long-term capital asset and TDS should be done at the rate of 20% plus applicable surcharge and education cess. If the seller has held the property for less than 2 years, then the property would become a short-term capital asset. In this case, TDS should be done as per the income tax slab rate applicable to the seller. For example, if the short-term capital gain is 11 lakhs, then the TDS should be done in slab rates, that is from 2,50,000 to 5 lakhs 5%, 5 lakhs to 10 lakhs 20%, and on the 1 lakh which is in excess of 10 lakhs should be calculated at 30% plus surcharge and education cess. Then the buyer has to obtain tax deduction account number, that is TAN, and remit the TDS amount within 7 days from the end of the month in which registration is completed. For example, if the property is registered on 16th of June, then by 7th of July, the TDS should be remitted to the central government's account. After remitting the TDS amount, the buyer has to file a ETDS return in Form 27Q. The due date for filing this Form 27Q is the month end after the quarter. For example, if the property is registered on 16th June, then the quarter in which the registration is done is the first quarter, that is April, May and June. For this quarter, the due date for filing the ETDS return is 31st July. So, the buyer has to file ETDS return within 31st July and issue a certificate to the seller. What if the buyer has not paid the TDS amount and furnished Form 26QB? Under section 271H, if the buyer has not paid and filed Form 26QB, then a penalty of rupees 10,000 to maximum of rupees 1 lakh would be levied. So, any buyer, before investing in an immovable property like land or building other than rural agriculture land, and the stamp duty value or actual consideration is more than or equal to 50 lakhs, then he has to do TDS and file applicable return. Thank you.